The market finally tagged the big 6,000 level in Friday's trading session. We've been discussing in our last several videos all of the volume in the options market that had been coming in at this 6,000 strike, indicating that market participants had a huge interest in the 6,000 level, and we finally hit that level Friday. We bounced off of this lower dealer cluster zone. We actually pierced through the bottom of it during Monday's trading session, dipping below the 5,800 strike. That was actually a huge buying opportunity, with the market ripping all the way back up to this 6,000 strike. So that's why it's so important to focus on the GEX data and the volume data in the options market. Both of these metrics combined can give you really great insights into what is happening underneath the surface in the options market and what dealers are doing. In this case, it was pointing to the high probability of the 6,000 strike being hit. The big move on Friday also saw us break above the downtrend line, which we've been in since mid-December. And so going forward into this next option cycle, remember Friday was the monthly OPEX for January. And so we'll be starting a new monthly option cycle. And so I think it's very interesting that we broke out of this zone that we've been in for the last monthly cycle, really mostly a negative trend. And we'll see that when we look at our historical gamma exposure chart. Switching gears to a chart of the SPY, we see the two big gamma exposure concentrations at the 600 strike and the 598 strike. This is mostly zero DTE GEX. This is going to be rolling off come Monday morning. And when we look across the rest of the options market, the GEX data is fairly evenly distributed to the downside and to the upside. Even if we were to scroll up here, it's basically the same both above and below. And so that's why I think there's going to need to be a few days of consolidation, perhaps retracement, as the options market gets reset. As I was mentioning earlier, most of the trading action was in negative gamma exposure territory, basically since the December 25th holiday. Basically since that point, we've been in negative gamma exposure territory. That says a lot for why we've been so volatile and why we've basically been bouncing back and forth in this negative trend over the last 3 weeks. But on Friday, we bounced firmly back into positive gamma exposure territory. So coming into this new week is going to be really interesting to see if we can maintain positive gamma exposure territory if the market resets with a positive bias. We'll be looking at the GEX data first thing Monday morning to see exactly how the market is positioned. Next, I want to take a look at Bitcoin. You know, the US markets are closed here for the MLK holiday on Monday, but the crypto markets are open. Bitcoin was actually traded above 100,000 over the weekend, and today was actually trading near the recent all-time highs around 108,000. We've been highlighting the gamma exposure at the 110,000 strike, I think, in almost every single one of our videos over the last couple of weeks, as we've been bouncing down here in the lower dealer cluster zone. This GEX was still there. We've seen continued volume coming in at that 110,000 strike, and look how sharp, how fast and furious the market moves towards those GEX levels. It's interesting to see that once the momentum starts to kick in, these gamma effects really start to act as a magnet where these large concentrations are centered. And so that's the case here. We didn't quite reach the 110,000 level, but again, I do expect, if volume continues to come in, I do expect the GEX at the 110,000 strike to continue growing. And even when we scroll up a little bit further in the chart, you can see more volume and gamma exposure at the 120,000 strike. So this is starting to get into outlier / nosebleed territory, but it's just an indication that market participants in the crypto markets are still very bullish. I like to look at the crypto markets, especially in relation to the equities markets, just to get an indication of the risk on sentiment. And so if the gamma exposure is any indicator of that sentiment, this is telling us that market participants are still interested in this 110,000 strike and even the 120,000 strike further on out. So those are going to be the next two levels that we are going to be watching very closely on Bitcoin. Next, let's take a look at Tesla. Tesla slowly grinding higher over the past week or so. Definitely not as easy of a time as it had back in the early part of December, trading nearly all the way up to the 500 strike before rejecting. trading. So it's a little bit more of a struggle this time around, but we do continue to see gamma exposure at the 450 strike and the 500 strike, with volume continuing to come in at both of those strikes. So that's basically just telling us that market participants still have an interest in these levels. You can see, look at the volume, over 100,000 contracts traded at the 450 strike and nearly 100,000 contracts traded at the 500 strike. So these are contracts that are far out of the money being traded in heavy volumes, both at the 450 and 500 strikes. So it's going to be really interesting to see how the price action on Tesla unfolds here in the coming 2 to 3 weeks. Next, let's take a look at Apple. Apple really struggling since the Christmas holiday. You know, the 250 gamma exposure concentration has been there for about 6 or 7 weeks. We actually got all the way through that level into the Christmas holiday and then has since rejected out of that level. So the 250 GEX concentration was tagged and rejected. What's interesting to me, though, is that volume continues to come in at that strike. The gamma exposure is still there largely. We'll see how much of that actually is rolling off as of the January 17th OPEX. We'll check that out Monday morning. But I suspect there's still going to be quite a bit of gamma exposure at that 250 strike. And if so, this could be an interesting area coming into our lower dealer cluster zone and the zero gamma exposure level, currently both between 225 and 230. So this range here is an interesting area for potential long positions. We saw an attempt off of that 230 strike to rally. That failed. We're still trading in this level. Next, let's take a look at GLD. GLD, really interesting price action, has basically been trending higher, corresponding to the rise in rates that we've been seeing since the turn of the new year. We've seen large gamma exposure concentrated at the 250 and 255 strike going back for a month and a half. We've tagged this 250 level a couple of times, and each time it's rejected. We saw a little bit of a rejection on Friday, but I think with the amount of volume that's coming in and the gamma exposure that's here at higher strikes, GLD continues to look like it's got a lot of interest from market participants. And of course, there's a lot of other factors in gamma exposure affecting an ETF like GLD in particular. So that's why I bring up rates, the increase in interest rates. That's something to note that has a big impact, of course, on GLD. But when we scroll up the chart, we see gamma exposure and hence interest at these higher strikes, like at the 260 strike and the 265 strike. And we also see volume coming in, pretty substantial volume. I mean, this is 10,000 contracts traded just on Friday alone above the 265 strike. We are watching to see how price is going to react around this 250 strike. If we can actually get a sustained breakout, I think a continuation for a move into the 260 and above zone is likely for Q1. So that's something that we are currently trading and watching in our community Discord. By the way, if you're interested in checking out our community Discord, I'll put a link down in the description below. We're constantly discussing different trade ideas, gamma exposure. We have a number of great traders in there sharing their own experience and their own strategies. So you definitely want to check that out when you get a chance. You can also get access to our gamma exposure dashboard and our option flow analytics tools by heading over to geeksoffinance.com. You can sign up and become a member. I'll put a link in the description below for you guys to check that out as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.